All right, team. So as of right now, I'm about to go over the trade that made me the $4,440 today in the one trade, one simple trade, and it's just gonna go over right now. So we're just gonna keep it short and sweet, and yeah, get straight on into the charts. So with that being said, you can see the trade on my screen right now. I'm going to get rid of the markups in a second, but I just firstly want you guys to see what the trade was, everything. It closed at a 1 to 3. I closed for $4,400. I was risking $1,500. I closed at a 1 to 3, meaning I had about $4,500 was my TP3, so right around there, a little bit lower. And then the trade overall went to about TP6. So if I would have been risking what I was risking, this trade could have potentially made me $9,000 in the span of 3 hours. I could have made $9,000 if I held for a little bit longer, but neither here nor there. I usually hold for 1 to 2, so I held for 1 to 3. So it was a bigger trade than I usually catch. But we're gonna go over the short and sweet trade. So first things first, you guys know my simple formula, my simple setup. I always look for consolidation. Then where there's consolidation, I wait for an old high or low to get ran, for price to run the other direction. When price runs the other direction, you either missed the initial false break move where it ran either a high or a low. This is always going to be the first potential time you can get the trade, but you're not always going to be able to catch the highest and lowest point of the trade. You're not always going to be awake during the time that this happens. But what always happens 90% of the time, when price has a push in either bearish or a bullish direction, gaps get left behind. And when you pay attention to the higher time frame gaps, when you pay attention to the higher probability gaps, there's going to be way less of them, meaning you're not going to have to guess on which gap is going to play out, which one is going to be the trade, because there's going to be so little gaps that you're just going to have one or two, and you're going to have enough arrows to be able to take your shot. So I'll wait for price to retrace, for price to get another push higher, and this will be the second ideal area for you to be able to get a trade if you don't catch that ideal move, which is usually the false break, which usually happens when there's a lot of volume. But like I said, we don't need to be perfect. We just got to understand this and how we can be able to take advantage of it. So we're going to go into our three-step, I don't even know what it's called, three-step markup process. I always mark up the previous day's highs and lows, because when price is bullish, the chance of us reaching for the previous day's high is far more likely. When we're bearish, the chance of us reaching for the previous day's low is far more likely. So having these areas marked up, it just always allows me to have places to point my eyes to. Where are we going, right? That's what I want to know. The second thing I always do is I mark up the Asian session range, which in this case will be from 18 o'clock all the way to midnight, just like this. And I always like to mark this up because this Asian session is the equivalent to the consolidation I like to see. A lot of the time when we get that higher low getting ran, a lot of the time Asian session is that low. A lot of the time a previous higher low is that low. So that's why I mark up these areas specifically, because I can use my trades for this. But in this case, what happened? I'm just going to break it down from what I see. Now, I caught longs. I don't care about any of this bullish. I don't care about any of this bearishness right here. This is something that you don't got to necessarily worry about right now. The main thing that you should be worrying about is how I was able to catch the bullish move during our time to trade right over here. What was going through my mind? So my mind, I seen that we were consolidating during the Asian session. We consolidated all over here. From London to have the low of the day at 1 in the morning. From creating the low of the day, we had a push. At what time? 2 in the morning. I tell you guys, the prime time for London is always going to be that 2 to 3 a.m. 2 to 3 a.m. is that prime London, just as 9 to 10 is that prime time for New York session. This is the prime time. So during this time, price left this 1 hour gap. And if I were to simply draw this 1 hour gap over, just mark up where this gap was left behind, because like I said, when you're paying attention to the higher probability gaps, the gaps that get created at specific times, and the gaps that are on the higher time frame, there's not many gaps. There's literally only one gap here. And what time was it created at? 2 in the morning, London session. So with that being said, this is the equivalent to this, but in this case we didn't make that low. We consolidated before pushing, but once we pushed, we left this gap behind. With this being said, we were having the expectation that this London low wasn't going to get ran, that we were going to have a London continuation. Why? Because if we see that price had this bullish move during London, left the gap, my thought process and my idea behind it is we're going to retrace into it and continue moving that bullishly. And from there, you can see, even though we got close, we didn't run that London low. It got very close, but it didn't run that London low. Sometimes it's going to get close. My stop loss was a little bit lower. I had about a 30-point stop loss. So if I also take it a step further, what else was the confirmations? If I were to pull a fib from this London low, to the current high before we started to get that little retracement. I'm going to pull my fib. Boom, boom. We're going to get the normal fib settings. You can see that this also aligned with the fib. You can also see that if you look to the right, this aligned with 44, 400, big figure level. So you can see how I start stacking up reasons for why price had the reaction that it did in this area. So let me just annotate it. So also, what time did it happen? 9 o'clock in the morning, 9:30 in the morning, the prime time for New York. When you show up at the right time, 9 times out of 10, you're going to be on the right side of the market because you're showing up at the right time. So at 9 in the morning, price retraced and filled the 1 hour for value gap, along with trading it to the fib long, along with trading it to 44, 400 big figure level. This is a lot more reason than you would need to be able to catch a trade. This is a lot more reason than you would need to be able to take advantage of something. So where did I get my entry? I got my entry right in here. When we filled in this 1 hour gap, it was a pretty good entry if I do say so myself, and you guys saw in the beginning of this video. But if we look at what my stop loss was, I had about a 30-point stop loss, as I told you guys, right below that London low, because my idea was if we are going to be bullish, we aren't going to run that low, and we didn't. So just like this, I was able to get my 1 to 3 trade targeting this high that was created at 5 in the morning. Very simple. It eventually all the way went up to a possible 1 to 6, 1 to 7, but it neither here nor there. It doesn't matter. And guess what? It all ended up coming right back down anyway. If anybody was holding for that previous high, I know they are sick. But that's why I have an area in mind. I target closest areas to me, and I don't need to catch the entire move because there's going to be a lot of times where I'm holding and holding and holding, and it's going to come right back just like this, and it's going to make it all worth nothing. I was able to capitalize on this trade. It's only Monday, and that's just how I did it. This was the reasoning behind the trade. Keep it simple. Don't overcomplicate it. It doesn't need to be complicated. I do the same thing on a daily basis, and I show you guys live. Like I already showed you the whole entire trade. Like this is the only trade I took today, and that was the reasoning behind it. If I could do it, so can you. I appreciate you guys. Like, comment, subscribe, and I'll see you in the next educational video.